Good morning, good morning. Good afternoon for those in UK and everywhere it's afternoon. How you doing, Raj? Happy Fed Day again. Hey Shanghai, how are you? Hey Julian, how you doing? Good to see you. Oh my goodness. So, oh my goodness. Yeah, let's see. So it's a Fed Day and we've surprisingly had pretty decent price action in Globex and some not bad trades. Um, I'm working on something for you guys to hold trades longer. And I think it'll be pretty good. I experimented today, and I'm just using a 5-minute chart, to hold trades a little bit longer and see how that feels, and what are the pitfalls that we need to look out for when we're holding trades longer? How do we manage positions? I'll do a video on it, or we might even do like a special webinar just for the room on Zoom, like the old days. We'll work on something like that. Hey, all right, Kevin, Cape Cod. What's up, Travis? Hey, Carlos, welcome. Welcome to all the folks on YouTube. Good to see you. Okay, let's take a look and see what's shaking. So, overnight inventory. Now, Carlos, you're going to hear some weird terms that you've never heard in any other trading room. One of those weird terms is going to be inventory. Okay? And the other one is cost basis. So those are just fancy ways of saying how much did you pay for your stuff? Because we want to know when you're selling your stuff, are you selling it at a premium or at a discount? Hey Billy, what's shaking? How you doing? So, because it's a market. So we want to know when we're buying something, are we buying something at a premium to where you bought it? Or are we buying it at a discount to where you bought it? So that concept of inventory we use to help us try and get some direction. Hey Nick, how's it going? Hank, how you doing? So inventory tonight, the pre-market, that's this particular profile. And it shows us that when you look at the close of yesterday, the overnight inventory is long, which means more than 70% of the volume traded in the overnight session is above yesterday's close. So when inventory is long, when the market opens, old business gets taken care of first, and that is usually a liquidation lower. But what happens if the market opens and it doesn't sell off and correct lower? What if it does this? Then it tells you that there is a change to the normal business conditions. Because if you had the close here and overnight inventory is short, you'll get a move up. If overnight inventory is long, you'll get a move down. Now, when those things don't happen, that means something has changed in the normal business, right? If you get long inventory and a move up, and you get short inventory and a move down, this means that there is selling competition. This means that there is buying competition. And how do we manage that information in a practical way is this is something we don't go long, this is something we don't go short. Okay? So if you know the business reason why you're taking a trade, you're going to do much better at trading. If you're just swinging around looking at moving averages and which is nothing wrong with that. There's nothing wrong with that, right? Or if you're trying to trade a pattern and you have no idea why you're trading this pattern, it's just someone once said to trade it and a couple of people had success. So, hey, let's trade a pattern. What if you want to dig a little further? Hey, Lyra, what's shaking? Right? How you doing this morning? So, knowing why a trade happens, right? Knowing what the business reason is going to really, really help us manage our business, manage our risk, right? So let's put it together now and see how we're going to trade this morning. Now, okay, thanks, S-Pill, for reminding me. Tomorrow is a holiday, which for some reason I keep forgetting, and it's not on purpose. So Thursday is a holiday, so there'll be like electronic trading. The markets themselves are closed, right? Exactly, Carlos. We are merchandising, right? And this chart is a sales chart of the merchandise for sale. That's all it is. Everybody tries to overcomplicate this and talk about all sorts of fancy terms, right? It's just a sales chart, right? So check this out. And these charts, these are called TPO charts. And they really quickly tell you this is where we acquired our goods. This is where we're selling them for profit. And guess what? When people get tired of buying them over a certain level, we're going to put it on sale. And we'll come right back to the area where we bought it. It's pretty simple, right? Another analogy that I like to use is the analogy of this is the warehouse. This is the highway. You load up the tractor trailers with product. And then you go, what's a fancy store in the States now? Do they still have Saks Fifth Avenue? Does that still exist? Barney's, New York? I don't know. It's been a while. Anyway, you go to a fancy store and you put it on sale at a premium, right? Now, what happens to goods that don't get purchased at those prices? Put them in a truck and you take them to TJ Maxx, right? You get the max for the minimum, right? And you're marking down price. Hey, Sonny, how are you? So does that make sense? It's just a market, folks. People love to make this more important than it is. What we want to do is we want your analysis to be simple. So when you're actually in the market getting hit in the face, throwing punches, that you can think clearly and execute, right? So how do we use this now? We're looking for a move down. Now, there's a couple of weird things I got to point out that I did in the Globex recording. I told folks that Hey, the low here at 60.17. I said yesterday at the close, I said look for us to go and try that 60.17 low. And look where we got. We went to 60.17 and 3/4. That's the low of the overnight. When we went to that low, we left what is called a poor low in market profile terms, which means that buyers were competing to get in the door here, so they lifted price. Here, let me just split this profile and show you. So when we got down to that overnight low, which was just 3 ticks shy of 60.17, all of a sudden the selling stopped and the market went right back up. How come? Because this 60.17 is an area where there's what we call a little swing low. And if you want to look at that, pretend that's a glass door, right? And you're one of these guys who's selling. If you look through the glass door and you see people lining up to buy, they're all lined up, just like the glass doors of Walmart before they open, right? If you see a big lineup of folks, you're going to raise price to take advantage of that. Now, if you look outside that door and you see people walking to their cars, you're going to follow them and go, hey, wait, come back, I'll give you a better price. That's just how business works. But very few trading rooms translate that into a chart. Now you actually understand the business that creates all this stuff, all these pretty lines. So now let's go see how we trade it. Okay? So this is just a more detailed look at what you saw in the previous chart. These are TPO charts. And then what we do is we use, but they're very hard to execute with, right? They're very hard to execute with. They are almost impossible. It takes years to learn how to execute off this. So what we do is we use a 1-minute chart. And if you look, I did a video on how to do it, right? And how we come up with these levels. TPO shows the bigger picture. But it's very hard to execute off of it. Hey, Redbeard, how you doing? Right? It used to be a lot easier when we had smaller ranges to execute off a TPO chart. Then the ranges got bigger and bigger and bigger, and we're like, whoa, we got to fix something here. So what we did is we came up with these balance levels. Now, the balance level I found was here, because I'm up at 2:30 in the morning New York time, because I'm in the UK right now. Hey, Jeannie, how you doing? And this is my balance. It's 60/40 and a quarter to 44. Now, if you're wondering what that is, I have a lot of videos in our room at the Trading Syndicate that explains exactly how this works. And I also just did a video and posted it on X. Right? Hey, Monica, how you doing? The Vancouver penny stock OG? Oh, my goodness. Oh, I tell you, it's a lot easier selling penny stock than retail trading. Right? I have a lot of respect for retail traders. Retail trading is hard. You have to have discipline, patience, good business habits, right? Penny stock, you just, get a bunch of people to buy and sell into it. So this balance is where the cost basis is. And then the green zone is double that. So if your stuff is priced here, here's your cost basis. This is 2 times profit. This is 4 times profit. And this is the 2 times discount zone. right? This is on the road to TK Maxx. And what that does is it helps us keep track of distribution and accumulation in our market. And we take trades off of it, right? So when we see trades come in, like for short sellers who love to short, the look above and fail of an edge means we can short, we got a place to put our stop, and there's a business reason to put our stop here. Every trade is a business transaction, and there has to be a valid business reason to take the trade, right? On a short sale, the reason to take the trade is you've identified that sellers are competing. So when the market looks above and can't get back above this 51.5, right? You put your sell orders in here. You put your stop just above. And you target the middle of the zone for your first cover. Now the theory is when it looks above a fail and fails, it'll rotate right back to the bottom. Right? But when you're getting used to trading, you can take half off here and half and wait here. Or you can take the whole thing off here. Right? Until you get used to handling trades. The second trade that we use is the look below and fail. Right? So when the market looks below a level, whoop, the heck happened here? Hang on. When the market looks below and then comes back up, the business reason is that the sell orders that took the market underneath are done. So you buy on top of that level, you put your stop underneath, and your first target to exit is the middle of the range. And then the rotation will take you up to the top of the range if the order flow exists. Right? So that's how we like to look at our trading. It has to make sense. Right? There's no reason to just get into trades. Once you start learning this method of trading, which is not actually a method, it's actually the business. Once you learn the business of trading, all of that stuff like FOMO and tilt and all of those things will just melt away, right? Because you will have certain terms and conditions on how you do business. And when you have those terms and conditions, the trade has to match those terms and conditions for you to open up your wallet. So you only do business on your terms and conditions. For setting stops, it's always structural. So let's go through that. GeoCap, I'll answer that in a second. So for example, say I'm shorting it here, Mark. Right? The rule of thumb, Taco, should be based on where the business ends that supports your trade. Risk tolerance is good. Right? But more than risk tolerance, Taco, it's risk capability. So even if you have a high risk tolerance and you're trading a $2,000 account, you shouldn't be using big stops. Right? It's what you are capable of risking. But let's make it even more clear. Right? So if I'm short under 51.5, what does that mean? It means that sellers are going to lower price, TK Maxx style, and that's the only way the price is going to move down is if the sellers compete and lower price. Now, if I'm short, say at 50, and I'm using 51.5 as a stop, or even 52, right? If I'm using 52 as a stop, and the offer starts lifting over 52, it means my sellers have seen buyers, and they're telling me, psst, 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 there's buyers here. Close your short. Right? When we were trading in the old days, we'd put a market maker on the bid and a market maker on the offer. And when those prices got executed, the market maker would call me and say, Hey JJ, I took in 10,000 shares from Knight, or Knight's showing me 10,000 shares at $5. I'm $5 bid for you. What do you want me to do? You want me to buy the 10,000 shares and stay, or do you want me to? I go just buy 100 shares and tell them to go piss off. Now I know how much Knight's got for sale. So you use the same method in charting, right? Because you don't have a market maker telling you what's going on. You put your sell order here, and if the market offers over 52, it means you've lost your buyer. Does that make sense, Taco and Mark? You've lost your seller, I'm sorry, not your buyer. Once you lose your seller, the business reason for the trade for the short does not exist. Right? See, this is how we used to trade in the old days. The only time that you'd short something is if you knew there was a big sell order coming. Somebody would call you and go, hey, Yorkton's got 5 million, blah, 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 blah for sale. So you'd go and, because there's a sellout. Somebody bought the stock and didn't pay for it, right? Or something's wrong with the account or whatever, right? There's a compliance reason for, the stock being sold out. So you'd go short 10,000 shares. If the stock was $5 and you knew that a couple of million shares was coming out, you'd go short 10,000 shares. They'd knock it down 80 cents to a buck, you cover, and then you buy drinks that night. But that doesn't exist anymore. So what we really want to do is we want to let the chart be our buddy and give us that insider edge. Right? The chart's going to go, hey, there's a seller here. Hey, there's bids here, so they stop selling and they're raising price. Right? All we got to do is listen to the chart. All we got to do is listen to the chart. The chart is like when your girlfriend's trying to give you directions before GPS. Now, if you don't listen, you're going to end up in the hood. You're going to get carjacked. Right? Listen to the chart. And in these economic times, with all this uncertainty, you've got tariffs. Then you've got the Musk-Trump lovers spat. Then you've got a war. God knows what he's going to have next month on the ticket. There's always some kind of drama. So the only thing that you can rely on are the transactions that are happening in a market. Those transactions are being laid out in this chart. The chart will tell you what's going on. You don't need to listen to anybody. You don't need to, once you understand that the chart's trying to talk to you, right? Pay attention, right? It'll really help you stay in the zone, It'll help you manage your risk. It'll help you take less trades. Like, for example, when the market's doing this nonsense, right? When it's doing this, that you don't touch that, right? So we only do business when the market's at an edge, right? Or when the trade's really, really clear, right? Otherwise, what's the point of doing business when the market is unclear? You want to have some kind of an edge, right? Where's VWAP? There's VWAP. So a lot of people, when they think about joining our trading room, they're like, JJ, I don't have TPO charts. They look really confusing. You don't need them. All I have this for, this is like a map of the city, and this is like a map of the neighborhood we're in. Right? So if you're a day trader, you can do perfectly well with a 1 minute chart. Now, if you're trading longer time frames, right, you can use a 5 minute. Once again, how do I find these zones? You use a high and a low. And when we look above that high, we come right back to that low. When we look below that low, you go right back to that high. That is two-sided trade, right? So a nice trade that we got to take was this look below and fail of 36, look above and fail of 62. So you trade the edges. You trade the edges in. And you can make a decent living doing that, right? Look below and fail. So you're buying 20, 21, 22 against 19 and 3/4 as you're out. Your first exit is 28. Your second exit, should you hold, is 36. That's a nice little trade. And it's not the most complicated thing in the world, right? So if you were long, for example, right? If you're long here and somebody starts selling here, the business reason for your trade does not exist anymore. So you're out. Right? If I'm buying a product at 22, wanting to sell it at 28, and somebody offers it for sale under 19, right? What's the reason to hold something at 22 when somebody's selling it at 19? It's not going to work. That's not happening. You're out. So you manage your risk. Hey, Redbeard, how you doing? We can also set up the fib tool to draw out the levels and color code them. Oh, that's cool. I like doing everything manually because I'm old, Redbeard. But I didn't even know such a tool exists. Is that on Sierra? That's pretty cool. Right. I suggest everybody when you start doing this, especially if you're not profitable, do everything manually. Right? So you get through going through the motions. I know it's boring, I know it's old school. But once you understand, it's like people who want to automate trading, right? If you're not profitable, don't try and automate something. Right? Only automate something if you're consistently profitable. Right? It kind of makes sense. So let's see where we open and how this thing opens up. Hey, Jam, good morning. And here we go. We are open. There's that move down. Woo! See, that's that move down I was looking for. I didn't get it. I was not fast enough at all. Let's see what happens now. Long 40 half, selling 43, flat. So as soon as it came over here, it was moving fast. So I wasn't able to buy it on the bid. I had to grab the offer. And then I sold it at 43. That was just seeing if that 40 quarter holds. I think we're going to rotate a little lower now if we lose 40. Let's see if we can hold 40. If we can hold 40, it'll rotate up to VWAP again. If we can't hold 40, this area here is very interesting at 34 and a half. Now when it's chopping around at an edge, I'll just kind of leave it alone. unless I'm really sure about direction. I see that there's sellers at 42.5. Now, if the sellers start to compete, this is what I was looking for. On the downside, let's see if we can get to 36.5. There was competitive buying here before in the Globex session. That area is being front run right now. Front running means if I know there are buyers here, I'm going to jump in and buy before they can grab all the product, right? I'm looking for a break of 34. And I want to see where the buying comes in. Once again, this is what we call finding the bid. Here we go. I want to see where the buyers are going to come in. How do I know where the buyers are going to come in? Because the price will lift and it'll take out the top of that candle. The top of the candle is where sellers initiate and start competing. See? Come on down. Looking for 34.25. Right. So the next area of interest, if we break 34, is 30, which is where the yesterday's low is. There'll be some responsive buying because the shorts will all be sitting here like hungry dogs waiting for product to fall down. Look how we stopped at 34. Little responsive buying, right? As the market rotates up, let's see where they sell into it. Right there. See? Told you there'd be a seller there. Why? Because they sold there before. Why wouldn't you sell again? Right? These are little things that a candle chart will tell you that they don't tell you in technical analysis books. But this is practical information you could use. Because if you were long 36, you know that there's going to be selling competition at 38. So if you want to hold that trade, you got to hold it through that move down and back up. The next seller is going to be before 40, right? It's going to be here. And if those sellers see buyers, they'll raise their offer like it's doing now. The next place will be 42.25. Right? So we found the bid for the open, right? That's just the opening bid, right? Nice work, Hank. Nicely done. It's not bad trading pre-Fed. It's not bad at all. Okay, what's next? Now, everybody who's long above 40 is not feeling too good right now, right? So let's see if we can get back above 40. Because if you can't, I'll be looking for lower. Gonna wait for the next candle though. Yeah, VWAP's right there. It is. Right, beautiful. And see this candle when it when it opened. What did I miss? It's above the level where the sellers were. So it's going to take that inventory, this little chunk of inventory, and go sell it here. We should be looking for 44. If we can stay above VWAP, look for 44. And the method that we use at the trading syndicate, it cuts out a lot of this FOMO stuff, right? If you miss a trade, not a big deal, right? If you know there's going to be another one, right? Your setup will occur over and over again in a market because the business never changes no matter what time frame. It's always the acquisition and distribution of inventory. A little choppy now. Does anybody have the opening breath? Two to one. Thank you, sir. Little choppy here. Thanks, Jeff. How are things in Minnesota? Hope things are calming down there. I heard you guys had some drama. It's not a place you usually hear about drama. Seller at VWAP, seller at 42. Now, when the candles start getting smaller, it means business is getting a little slower. Let's see if somebody comes into the store now. When it's in the middle of a zone, like it's in the middle of this blue zone, I leave it alone. Back down to 40. Yeah, me too. This chop is a little hard to trade, so just chill out. Have a coffee. $6 million man. NQ is more like 4 to 1 positive. Well, that's cool. You know, they started replaying episodes of the $6 Million Man on Prime. It's hilarious. Oh, yes, margin raised today, Travis. Right, so margin for retail traders is higher today because the brokerage firms let you trade with their money, so they want to protect their bottom line, right? Fed days can get a little out of hand. Yeah, it's good, Jim. That's really good. Starting to see those swing lows. That's good. Oh my goodness. Come on, ES. Let's go. Let's go. Let's go. We got paying customers. Come on. Turn those machines back on. There's no slacking off here. There we go. Okay, so we've got sellers at 42, but it keeps lifting at 40 and a quarter. I'd really love to see that 34 half low that we put in off the open. I'd love to see that tested. Don't worry, Redbeard. Jam does that all the time. Okay, let's see if the sellers are desperate enough that they've got to lower prices and keep it under 40 quarter. See, and here's the thing about retail trading, because we don't have a huge margin for error. So there's a lot of the times when the business just doesn't agree with us, right? If it's choppy, and a lot of traders don't know this, so they go long, they get stopped out. They go short, they get stopped out. The best thing to do is sit and have a coffee. Or if you're not into coffee, I don't know, whatever fancy drink you kids drink nowadays. Let's see if we can get above VWAP. Come on. Can't stay under 40. We got sellers at VWAP. Here we go. Here we go. 44. Come on. Giddy up. Let's go. One more tick. There we go. There's 44. Now, if we take out the current high at 46, right? If we take out that high, it'll set off some stops, right? Not yet. See, they're selling into it right there at 44. Yeah, they drink a lot of tea over here, Hank. They drink a lot of tea. Now, this is more like pre-Fed, right? Slow. A lot of traders are being kept out of the market because of higher margin. The larger traders don't want to play, right? So it kind of slows down and you get this chop. When that happens, you trade less. Hey, Dallas, what's up? How you doing this morning? Offers lifting. Creeping up on the open. I'm not seeing a short. I stopped seeing a short when we didn't take out 40 and a quarter and stay under it. So what I'm looking for now is for it to creep up and take that stop, and then your target will be 49 right here. It's not going to be pretty, but that's what I'm looking for now. If it holds 44, you're going long, and if it breaks VWAP, that's when you know you've got selling. There we go. 44 long. We sell into this strength. I'm offered at 47, and I am flat. I only had one contract. Would you set a limit order? Well, no, Redbeard. What I did was I bought the 44s. Actually, I was long 44 half. Stopped just underneath here, and I was offered at 47. So I got hit on the bid, right? And then as soon as I got hit on the bid, right? Hey, we got to do a one-on-one. So when I got hit on the bid, you put your buy order in, you put your stop. As soon as you get hit on the bid and you're long, you put your sell order in just underneath the level and front run it. So when the market goes up, it takes you out. Does that make sense? I don't want to buy a breakout. I want to sell into this. I don't want to buy it up here, right? Now, breakout traders buy breakouts. Professional traders sell size into that breakout because it creates liquidity. And where did I say? 49, right? That's where the sellers are. I mean, you can trade breakouts, but you want to try and get it before, right? Hey, Aubrey. Nice to see that old school trading, coffee and nicotine, still works. Right? Get a bottle, you got like that glass jar of Folgers and a pack of Marlboro Reds. That's your trading juice. Good, good, good. Old school. It's a time-tested method, right? Was it last Friday we were having happy hour and somebody was like on video and they threw in a dart looking for 51. We're going through the single prints, right? We ran out of supply. We took that stop. See how they're selling into it, Redbeard? See how you go up? That creates the buying that if you're long here, that's where you plug it. Why did I go long 44? Because it got above my level and the offer was going higher. And the singles are filled from yesterday. Next stop is going to be 54 if we stay above 51 and a half. So overnight inventory was long, but we didn't have like a really serious correction to overnight inventory, right? Yeah, remember that jingle? That was good. Oh, right. How many people do you think we got short underneath 64, 60, 44, 60, 40? Right? Everybody was probably shorting, and they're the ones who helped push price up from 44 to 51. Because once the shorts discover that they're trapped, they come in and start covering. And that's why you get the succession of green candles. This is the balance zone of the day. I do them every day. Uh, June, I do them every day. I like to see fresh information every day. Now we're going to do some distribution. Or as they say in Vancouver, distribution. There's 55 and a quarter. Looking for 65, 60, 55 and three quarters up here. That's the next stop. They're probably going to sell into it a little bit. How long was I a market maker? I was a deal guy. So I was an executing trader for insiders, Billy. And I worked with market makers and I fed them order flow. So they'd show me bids I would liquidate. Um, and I did that from 93 till 2012. And I stopped because I had a heart attack. And I had to have a quintuple bypass. Otherwise, I'd still be doing it. It's okay. As far as open heart surgery goes, it was a breeze. I was very, very grateful to have good doctors in Vancouver who looked after me. So I had to do something less stressful than doing deals. So I thought retail trading would be really easy. Oh man. Yeah, I thought retail trading would be a walk in the park. Oh, that was funny. How is that more stressful than retail? Because you're managing people who lie to you consistently, JR. It's kind of like being an alligator. It's like you're looking after alligators. You never know when your clients are going to turn and bite you. It's a pretty cutthroat business. Retail's not stressful. It's just difficult because it's a completely different business. Hey, Tamil Bulls. I actually understand Tamil. I can't speak it worth anything, but I do understand it. You can't hide bad trades as a retail trader. Thanks for the news, Truth. There's news at 10. Okay, be flat or be fast. I don't like being in a trade when news is happening. That's just a risk management thing with me. Especially now with algo trading, my God. These algos can execute 300 trades before you have a chance to take a sip of water, for God's sakes. It's so easy to get stuck. Do you think that wholesaler traders acquire inventory in Globex to sell higher for profit? That they're required to take prior to... It's a mixture of both, right? I think a lot of this action this week, S-Pill, is revolving around the fact that we have a contract expiring and we're rolling into a new contract. At the same time, we have some macro information like a Fed decision on a Wednesday. That's why if those of you if you've had if you found it a little difficult trading this last week or last week and a half, it's probably because of that, right? And I really hope that the news cycle calms down. I sound like a broken record. I keep saying I really hope the news cycle calms down. I keep saying that every day, every month. But yeah, there's a holiday tomorrow too, right? Which gives it a weird order flow, right, JR? Because you're doing business and all of a sudden you stop, right? And then we're back on Friday, right? Tons of macro stuff. And the thing is that the macro doesn't change. It doesn't, it's not, like usually they set economic policy and leave it alone. This guy changes policy every week or whenever he feels like it, which, I'm sure like the analysts who have to do the modeling and stuff like that, I'm sure they're all like losing their hair. Because every time they set policy, they do their models, and then he goes and changes everything. Oh, man. Right. So, once again, lots of uncertainty. What do? We trust the chart. The chart is your friend, my friends. The chart is your friend. Right now, it's telling us that there is no reason to sell underneath 52. Right? We got buyers lining up here. So they're trying to coax those buyers over 55 now. I'm not a macro guy, so I'll watch people like Scarf Guy. What's his name? Raul, right? And they make very valid points. Like Scarf Guy says, you know, remember that all of this stuff is collateral, right? So the price of the collateral really can't keep going down. All right, here we go. B period opens. Let's see what we do. It's going to backfill a bit. I'm going to be looking for bids here. Just under 50. He always wears scarves, right? That Raul Paul guy? That's why I call him Scarf Guy. Hey, listen, what do I know about fashion? Nothing. Little sale, right? They stopped buying it at 53. Put it on sale down. Let's see if we hold 49. And if we break 49, looking for that 46 level here. Could be wrong on this, but let's try like a little short here and put my stop at 50 and 3/4. I'll put a bid under 47. If I get stopped out, yeah, I got stopped out. Okay. It was a little stop was too tight. Yeah. See that? There we go. Now I'm long 50 and a half. That short told me not to go short. And I'm offered at 52 and I'm flat. So I took the short, got stopped out, turned around, went long. When I saw that the bottom of that candle didn't take out that white line, right? Quick scalp. And older traders, I don't know if there's any people who are older watching this stream who've been around for a while. Those old traders, when they come off, what they do is they short down to the bid. When they find the bid, they flip and buy. Do I ever piggyback on big DOM orders? Hell no. Jesus, God, no. No, I don't even look at the DOM. I just use it to put my orders in. I never look at it. Any reason why not? Because no trader in his right mind, unless they're like Tony Montana high on coke, is going to show their hand on a DOM. And I used to manipulate level 2 order books for a living. It'd be like showing your hands at a poker table. I never ever use that. What? And the other thing is, right? Yeah, we don't use the word spoofing, but you guys like that word? We just call it work. So say Aubrey, I wanted, say I, what if I wanted to sell, right? What I'd do is when the market came down here, I'd show a huge bid, and I would be every offer, right? So when the market came down here, I'd throw a big bid up here. All you guys would come in, and then I would just boom, 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 lift my offer and sell into it. You do the opposite. One of these days, when I do a deal again, what I'll do is I'll show you guys live on a level 2 how I move market makers around like chess pieces on a chessboard to give you guys the impersonation or impression that something's going to happen. Nice long, S-Pill. Nice work. Exactly. I use a massive offer if I'm collecting. I use a massive bid if I'm distributing. Okay. So Aubrey, if you look at that whole level 2 order book, that's all me. I'll do a session on this one of these days. Right to that stop. That's one of mine. Nice work, Sonny. Well done. Well done. So if you see those big bids like 30,000 at 348, 10,000 at 350, that's all me. Every single one of those bids is me, and every single one of those offers is me as well, right? You don't get transacted geocap because you only do that on something where you own all the supply. Is the president talking? Okay, be careful then. Thanks, team. So one of these days, I can show you how it's done. But when I actually get my hands on a level 2 on a deal, then I can actually do it. And I'll do that. That'll be the last session I ever do because then I'll have to disappear. I'm like, okay, this is how you manipulate a stock. Okay, folks, have a nice life. Bye. That'll be the last session I ever do. The right hand chart is a TPO chart, but spend your time on the 1 minute because that's what we use to execute. Nice, Doc. I'm looking for 60, 65 if we can take the overnight high. I've got 66 and a half here. 65 and three quarters is one of my old biblical levels. Trump said to go long. You gotta love a president who gives stock tips. Oh my goodness. Oh, it's beautiful. A little distribution now. All right, we're taking the overnight position, yesterday's position, and we're retailing it out here. Yeah, let's hold off on that for a while, Hank. Okay. I only take trades at the edges, Sonny. Sometimes I'll scalp if I see a trade. Like when I, like for example here, let me just get rid of. So for example here, I took a short, right? I was short here. I got stopped out on the short. So I turned around and I went long because I saw support here up. But usually what I'll do is I'll do the look below and fail, wait and buy it up here, put my stop under that level, and then sell into the strength. That's a more disciplined trade, right? So I do this when it does that, or when it does a look above and fail. But I try not to mess with it in the middle. Only at the edges. So what that means is you trade less and you have better odds because you're trading from the outside in. Looking for the overnight high. Whoop! Just ran the stops of the overnight high. The next set of stops will be that H high from yesterday and 60.65 and 3/4 once again. Quite a big level for me. Let's see if we can get up there. Think about it, folks. If you were a dealer, if you were a wholesaler, and you had inventory between, say, 60/40 and 60/50, wouldn't you want to get rid of that inventory before the Fed decision? Just to get into some cash, right? Wouldn't that make sense? Lighten the load a little bit? That's exactly what's happening. Right? The order flow is supporting it. And order flow is just a really fancy way of saying customers. So if the customers support higher prices, you can raise prices. That's why they call it making a market. You make the market according to the customers that come into the store. Look above and fail overnight high. Yeah. Yeah, your stop 64, right, Aubrey? Right? You don't really need to spend much more on it. Now we should backfill a little, right? Quote unquote normal is to backfill when you take out an overnight high, right? So I'm looking for, let's see if we can get down to 59. Oh, come on. Come on. Don't be greedy. Sell some. Come on. Come on. I know there'll be bids at around 57 and a half because that's where B period took the A high. There'll be shorts trapped under there for sure. Ah, bastards. 1 minute backfill. Come on. Yeah, it's not ready yet. I want to see how this contract responds to 65 and 3/4. So when I took this trade, it went right through it. That was a nice look below and fail of 51, rotation right up to 66/4, 66 half. And now I'll just double this again. So that's 4 times profit. Let's see if we do a look above and fail of 66. And these levels are simple. It's 2, then times 4, and then times 8. One, two, three, four, five, six, seven. One more. Little backfill again. Right, the backfill is after a move up. Right, you go up, you backfill, that brings in buyers, go up, backfill, that brings in buyers, go up. Those are little flash sales. Right, attention shoppers. If you missed it at 51, we can sell you it at 50, 55. Right, same thing. What's the 128 thing? It's cost basis and profit. So you have a cost basis. Actually, I put a video out. Utkarsh? I hope I pronounced that properly. I put a video out on X, and I explained exactly what the 1248 thing is. It's a cost basis. Say you buy 100 units of something for $1. You sell it at 2, it's 2 times profit. Sell it at 4, it's 4 times profit. 8, 8 times profit. That's it. It's pretty simple. Because it's a market, right? That's why we call it the futures market, the stock market. It's a market. You get a bunch of cheap crap and you sell it at a higher price for profit. When people don't want to buy it, you put it on sale. The chart that you're looking at is a sales chart, and it tells you the accumulation and distribution of the inventory for the day, week, month, whatever have you. Nice short squeeze this morning. So, folks, once again, please come and join us at the Trading Syndicate. We've got a great room of traders where we trade and learn every day. I'm there all the time. Use the discount code to sign up. It's less than 50 cents a day. And if you want to learn how to trade with funded accounts, OPM, our friends at Apex, they've got a discount code in the description of our video. Well, you've signed up? Good stuff. DM me. If anybody signs up, please DM me if you need any help. You want to have anything explained to you. I'm always around. I'm always working. I'm in the UK right now, so I'm 5 hours ahead of New York. So if you message me at 7 p.m. or New York time, I'll be asleep sawing logs. But when I wake up, I'll answer messages. Nice 3 for 3 with no drawdown. I'll take that any day, S-Pill. It's nice. Beautiful. Is that a look below and fail of 66 half? Golly. Well, the thing is, S-Pill, 30-point trades are great. Don't get me wrong. But how about taking 3 5-point trades, right? You don't have to eat the whole thing, and it's like a pizza. It's okay to cut it up. You don't have to eat the whole pizza in one piece, right? Nice work, Redbeard. Nice work. Right? 66 half to 70. Beautiful. Right? I love it when a plan comes together. The only thing that's missing this morning is a good cigar. The other thing is once you get consistent, say you do 3 to 5 point trades. Well, if you do 3 to 5 point trades with 5 contracts, that helps pay the bills. What are the trading syndicate meetup times, Carlos? Well, I do a Zoom or a YouTube one of these sessions at 2:30 in the morning New York time because that's 7:30 in the morning UK. And they're all recorded and all posted. But the main one is this time. It's 9 o'clock Eastern time. So what is that? 7 a.m. your time? And that's every day, Monday to Friday. And everything else is recorded. You can give us a try for a month. There's no, you can do month to month. And I promise you, if you join us for a month, I promise we'll teach you more in a month than you'll learn anywhere else. Information that you can use. 8 a.m. Yeah, so 8 a.m. And they're all recorded and posted on YouTube. Looks like we're gonna have some single prints, eh, folks? Yeah, yeah, yeah. There's 71 and 3/4. Levels are working nice with the new contract. Oh, just popped him. Yeah, like I said, there's nothing wrong with one 30-point trade, but I would rather take three 5-point trades. No, we got dealers. Wholesale wants to get rid of inventory. And what do I mean by single prints? When the next half-hour bar opens up, we're going to have a pretty decent short position from the top of A period to wherever that next half-hour candle opens up. So that's the one nice thing about market profile. This can help you identify where short positions and where trapped inventory is really quickly. You can do it using candles as well, but it's just kind of nice. So right here on the old candle wax, that's the bottom of our short position. And so shorts are trapped in this big green box. So when the market backfills, we'll find the bid. Right, you can see that already, right, Carlos? Nice. Beautiful. Well, folks, have a wonderful day. Sorry, I'm laughing at what Steve Austin posted there. Have a wonderful day. Trade smart out there. If you need any help, reach out. I'm around. I'm vwaptrader on X. We are the tradingsyndicate.org. And if anyone needs any help really badly, you can always email me at vwaptrader1 at gmail. Thanks, everyone. Have a wonderful day. Remember, don't be in a trade when that Fed comes out. Bye for now.